91% win rate. This is madness. This strategy has been backtested over 16 years of data. Hi, I'm Pizza T. Erd. I would never trade that strategy on a live account. One losing trade can wipe out over a month's worth of profits. Hi, if we haven't met, I'm Lisa, a data scientist turned algorithmic trader, and I've been trading exclusively with robots since 2022, and my public live track record is on DarwinX Zero, where anyone can check it at any time. And I run a community where I share my robots, my experiments, and the process in the Algo Lab. If you clicked on this video, you're probably searching for a high win rate strategy. So have you been following all the trading advice but struggling to find consistent profitability? Well, the truth is I would have never made it to DarwinX Gold with a 2-year track record if I listened to 90% of the information I found online. So in this video, I'm going to show you why looking for a high win rate strategy isn't such a good idea. This strategy might look great on paper because it has a high win rate of over 91% and it has a back test history back to 2009, and it's turned a 10K account into $167,000 of profit. And the entry logic is pretty straightforward, and on average it's made 12 consecutive wins, and in the worst case scenario we've only seen 2 consecutive losses. I created this strategy using a tool called Strategy Quant that uses a genetic algorithm to make strategies fully automatically for me without needing any code. And yes, while the tool is very powerful, what you need to always ask when you see an amazing backtest is, what is the process used to create the strategy? I can get amazing results with just a click of a button. In a few seconds, I have all these strategies that look amazing, but 99% of them will fail in live trading because as an algorithmic trader, the biggest danger is over-optimization. And over-optimization is where you have all these inputs in a strategy and you search for the very, very best settings that give you an amazing backtest. But when you put them on a live account, they fall apart. And that is what I teach in the Algo Lab, because process is more important than a single strategy. If you're a trader, then you might want to check out DarwinX Zero. If you're not familiar with them, they are a platform designed to reward good traders, and you can get a simulated 100K account to trade and earn money from your trading. So currently there are a total of 4 different ways to make money in DarwinX. In the silver stage, you get between 30 to 375K in allocation, and you can keep it for 3 months. In the gold stage, you can receive up to 500K in allocation and keep it for 6 months. And then there's investor capital, where you can get into the millions and millions of dollars. And then now the 100K permanent allocation, which is the instant allocation and the performance-based allocation. And all these 4 different options are stackable. So you can get silver, gold, investor capital, and the permanent allocation all in the one account. I've personally been trading with DarwinX for a year and a half. I've received multiple payouts from them and made it into Darwinia Gold. So if you're a trader and want to make some extra money, then I have a discount below if you decide to sign up. Thanks DarwinX for sponsoring this video. Okay, so this strategy was created and it actually did pass 4 steps of my 8-step process. It looked great in the first and second data tests. The Monte Carlo robustness tests was fine, so it passed 3 different robustness tests designed to fight over optimization. But here in the compare step, this is where it failed. So my background is programming and data science, and as a programmer, I absolutely hate doing things manually. But as I've gained more and more experience as an algo trader, I've found the need to do a lot of things manually. Not everything should be automated, and that's done right here in this step. This is where you take the strategy and look at it and use your own judgment to see if it fits your risk profile. So for me personally, I like strategies between 35% and 75% win rate. I might accept strategies slightly on either side, but a 20% or a 70% win rate is something I'm personally uncomfortable with as a trader. This is a chart of the win rate from 0 to 100%. In the middle here, you've got 50%. So in order to be profitable with a 50% strategy, because we've got slippage and commissions and swaps, we need to have our winning trades slightly bigger than our losers. So if we put up a ratio of average win versus average loss, then it might be 1.1 to 1. At the lower end of the win rate scale, our average win might be 10 times our average loss, but here you'll see lots of consecutive losers. And at the higher end of the win rate scale, our average win might be 1/6 of your average loss, and you'll get lots and lots of consecutive winners and the occasional loser, but the loser will be very big. So this strategy that we have right here is at the very top of the win rate scale at 91%. So 12 average consecutive wins and an average of 1 consecutive loss. But the average winner is $781 and the average loss is $5,131. That's 6.5 times bigger than the wins. So one loss will wipe out a month and a half of wins. 1.5 months. The sad thing is that this isn't the worst that I've seen. I've tested hundreds of expert advisors over the past few years, and one of the most popular commercial expert advisors online included set files where the loser was 20 times the size of a winning trade, wiping out 3 and 4 months worth of profitable trades. So the next time you see a high win rate strategy, ask yourself, how big is the losing trade compared to the winner? And is that something you can handle psychologically? I'm not a fan of huge swings in my equity, so I prefer strategies in the middle area for a much smoother equity curve and easier on my mindset. Speaking about psychology, did you know that 98% of the time strategies are losing or in drawdown? Even when you're trading profitably, it is still hard on your mindset when you always feel like you're losing. So that's what I investigate in this video right here. Thanks. Bye.